un-American, insane, never going to happen, crazy, very, 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 very bad idea. That would just crush capital deployment. I mean, this guy needs new advisors. That was unbelievably bad as a concept. What made America great? Why did people immigrate here, including me? To get access to capital and markets and take risk and create jobs and businesses that buoyed the most powerful economy on earth. And now we want to tax them for their success? That's the definition of insanity. That is the worst idea I've ever heard, and it's never going to happen. Now, look, I'm a big fan of the president and what he did on getting things organized around the pandemic, and that's whatever. But this is an un-American idea, a very, very bad idea, and one that would kill the essence of what makes America great. I mean, that is insane. And the chance of that happening is zero, because what I predict is going to happen in the midterms, not because of just this idea, but the more you table insanity like this, the more you hurt the essence of every American that believes in the American dream. The idea of starting a company in your family, building it up, and providing freedom for your family, and then being penalized for even thinking about doing that. I don't care what party you're in. I predict he gets decimated in the midterms, and as a result, can't pass any policy, and we won't be dealing with this until the next general election. This is an insane idea, and I have never heard such a bad idea ever. This is the worst idea I've ever heard, and it's 100% un-American.
How does one manage timing in the Bitcoin market? What are the biggest barriers to crypto adoption among institutions? What's next for stablecoin regulations? And most importantly, where is the Bitcoin space going next after the recent fall from the $40,000 mark? Let's find out all the answers from the man himself, Kevin O'Leary. Hello and welcome to Money Talks. In today's video, Shark Tank investor and prolific entrepreneur Kevin O'Leary updates about his cryptocurrency investment portfolio, government regulation and adoption of Bitcoin, how to manage timing of the crypto market as a new investor, and why crypto will be the 12th sector of the S&P 500. So without wasting any time, let's dive right into the video.
We're nowhere in the adoption. The truth is that there's no foreign sovereign funds. There's no institutional capital. We're nowhere. We're nowhere. We're nothing. I mean, everybody's excited about Bitcoin. The fact is, sovereign funds globally, which have most of the capital and pension plans, U.S. stateside, zero, nothing. So for all the excitement, we got a long way to go, and they're never going to invest in it until we get policy and we get regulated. And that's the whole investment thesis. The whole idea is you're getting ahead of the institution here. If you believe that it has economic value and you put a portfolio together, you're going to get in long before $1 trillion worth of capital comes in this market. Bitcoin itself is not $1 trillion. That's nothing. It's nothing in the constants of financial assets. The whole market, $3 trillion. That's nothing. I know it sounds like a big number. Nothing. It's nothing. You compare it to real estate or even gold, nothing. And so that's why there's an opportunity here. You don't have to be a crypto cowboy. You have to think methodically. If there's real economic value, you position yourself now, and I suggest here's how you do it. I make the assumption, I could be wrong, but in the next 12 years, crypto will be the 12th sector of the S&P. There's 11 sectors. If you look at how a sovereign fund or pension plan manages capital, let's say they have $100 billion. That's the world I work in. They allocate up to 20% in any one sector and up to 5% in any one name. So if you're really bullish, like I am on crypto, you put 20% of the operating company's capital into crypto and no more than 5% into any one coin, token, blockchain, or level 2, whatever you want to call it. And that's what I've done. I got 32 positions. I got 20% of the capital tied up. It's volatile as hell, but I'm okay with it because I make the assumption at some point all of this policy that's being proposed will be adopted, and then Katie bar the doors. Then we'll have a real asset. We'll have, I know it's really trite to say, oh, Bitcoin's less than $1 trillion. $1 trillion is dog shit in the institutional world. It's nothing. The blockchain and coins, Big Daddy being Bitcoin. So I don't think Bitcoin is a coin. I think it's software. I think Ethereum software, Polygon software, HBAR software, any of these projects, from Helium, Avalanche, all software. And the only reason they'll survive long term is they bring some kind of economic value to the table. So give me Polygon, which I just took an investment in on Sandeep's last deal. Basically says, look, let's aggregate transactions and push them through Ethereum at one transactions, cut gas fees by a huge amount, which works in India. Well, why wouldn't I invest in that? That's a great idea. I mean, there's real economic value there. Same with Helium, if it's going to change telco. I like that idea. Solana, is it going to speed up blockchain? Well, Sam Bankman-Fried says, yes, why not put a 5% allocation into that? I don't know who's going to win. I got 32 positions. I only need 2 of them to work, and I've made a shitload of money. So it doesn't, I look at it in the nascent days of the internet in the 90s. Yeah, some of these are going to be pets.com, but others are going to bring tremendous value and be the Googles and the Microsofts of their generation. The whole idea that crypto is worthless, that's stupid. It's here to stay. And the only reason it's here to stay is I just a couple of weeks ago told an international speaking agency that wanted to hire me in a country I'll leave nameless. They wanted to ACH me the foreign currency, transfer it into US dollars. It was going to take 3 weeks. I said, never going to do it. Just pay me in USDC. If you can do that, I'll do the deal. And I was able to pay the agents, all the expenses, everything in 1 second. So why wouldn't stablecoin be a long-term great payment system for everybody? If I'm using it now and I have to, push back on people saying, well, I can't do that. I said, well, then I can't come and speak. You pay me USDC or give me another stablecoin. I don't care which one. That way I can just put it through my account and pay everybody in 2 seconds. So that's why I know that's going to stay. Plus, you got bills coming from senators and yada, 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 yada. Look, there's value in these protocols. They're just software. You can't manage timing. You can't time the S&P. You can't time crypto investments. You got to go long and you got to be diversified. I mean, I have so many positions. I don't know what's going to work, and you can't know. You either believe in the metric and the protocol of productivity around financial services. You don't. I'm a believer. But I also own some very speculative stuff like Ethereum. Ethereum is, cats. And why would I invest in that? Because I'm big in cat DNA development, and Ethereum gives back to shelters for animals. I mean, that's like, where's that going? Who knows? But I own a bunch of it because I want to be supportive of animal shelters. It's a way I can do it on a very democratized way. But that's not exactly economic, productivity enhancement. That's just a cause and a movement, which also can be accommodated by tokens and coins. And then I'm very big in watch collecting. We talked about that earlier. So I'm on a very big protocol to write the white paper for watch NFTs for authentication and insurance. Not even trading the NFTs, just providing authentication so you can ensure the portion of your watch portfolio that you're wearing and the rest that are in a safe, you don't have to insure. You can do that with an NFT. And the watch industry, the secondary market is 12x the primary market. It's billions. You need an NFT for that. So all of these are protocols that I'm invested in because I live them daily. I started, I started in 2017 with a position in ETH and Bitcoin. And boy, was that a toxic environment with the regulators because I had so many investments. I was even the chairman of an ETF company. And so I couldn't be offside on that. And my own lawyer said, stay out of this and we don't want you talking about it. There's a lot of Wells letters going out. But that's slowly changed. Let's take, for example, the most progressive market right now is Canada. They were the first to license the first, crypto exchange with a dealer broker attached to it. That was an order out of the OSC, the regulator there. That was a company called BitBuy. I know it well because we bought it last week in our company called WonderFi, which is also traded in Canada, where the regulator is very accommodative. WonderFi has an investment thesis that they're going to roll up crypto exchanges around jurisdictions in the world that are licensing them, like the United Arab Emirates and other countries, because that's the infrastructure of crypto crypto liquidity is exchanges. The great thing about an exchange is you don't care what the price of Bitcoin is. You get your basis points on every transaction. That's the investment thesis. But the regulator in Canada went first. They allowed the first Bitcoin ETF and the very first Ethereum ETF. Then you saw the United Arab Emirates. Then you saw the Swiss. Then you saw England. And all of these markets started to open up to crypto. And I said to myself, wait a second. Does that mean I've got to go invest in these other geographies to get ahead of the curve here, which is what I had to do. I had to go to Canada, I had to go to UAE, had to go to Switzerland. And on a fully disclosed basis and make investments on those geographies in those local currencies, sometimes in US dollar, whatever it was. And because the regulator became accommodative, it starts to tell you that policy is moving in the direction of adopting crypto. But nothing has been more accelerated in the last 6 weeks, including Bitcoin 2022 last week, with all of those politicians. Senator Cynthia Lummis herself showed up on Friday with a huge keynote on policy, 600-page bill. And I think she'll table it in 3 different pieces, but it contemplates everything except NFTs. You gotta take that in a very positive light.
Shark Tank star Kevin O'Leary, aka Mr. Wonderful, has predicted that trillions of dollars will flow into cryptocurrencies, particularly Bitcoin. In addition, he said Bitcoin mining will, quote, save the world. He said that based on his experience in the indexing business, massive pools of capital, these trillion-dollar pools, are waiting for policy. They currently own zero or very little crypto. O'Leary further said, the beautiful strategy here is when we get policy, when we make Bitcoin an allocation for institutions, which they do not have yet, what I predict will happen, they will put between 50 basis points to 300 basis points into their portfolios. He concluded, how much money is that? Trillions of dollars. So if you want to see Bitcoin appreciate in value, if you are an advocate like I am, you want regulation, and you stand back and watch the capital pour into this. One of the primary vitriol directed towards cryptocurrencies is that it is energy intensive and harmful to the environment. However, O'Leary believes that is precisely where the potential exists. But O'Leary envisions a future in which Bitcoin mining operations are powered by nuclear or hydroelectric energy. He intends to invest in transmission lines that will connect them, and he believes they will have the ability to power nearby communities. So when do you think the next Bitcoin bull run will begin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.